Wonderful good day, ladies and gentlemen. Commodity TV today out of our studios in Munich. And with me here is Inca One Resources and Edward Kelly, the CEO and President. You remember the toll milling company out of Peru producing gold now. Edward, thanks for taking the time to be here.
Thanks, Johan, for having us back.
Of course, we have to. First of all, I said it already, you do toll milling. What is the status in Peru? What is going on there?
Well, as you know, we're under the small-scale mining sector, and the small-scale mining sector is anything under 350 tons per day. And almost 2 years ago now, the government announced they wanted to formalize this sector and put proper environmental standards in place and standards for working conditions and also taxation. So it was a big job. As you know, there's literally thousands of mines and hundreds of plants to be able to process this ore for the small-scale mining sector. And they announced that in April of 2012 for 2 years, and that's coming up next month for the deadline of it. So there's a lot of activity happening in Peru, and companies working to be able to get their permits in place and paperwork finished off. We are on good track. All of our final details are coming together for that now, and we plan to submit all of our paperwork and permits and environmental upgrades by the middle of April.
Excellent. So you're in good shape. That's all full on track. All is good.
Everything's on track.
No worries.
No worries. Yeah.
Great. I read in one of your press releases that you have a 25-ton capacity to mill,
Yes.
to produce finally your plant, exactly.
Our plant's at
as you do
25.
toll milling, of course, And when I did the mathematics, you are around, let's say, 5 to 7 tons a day if I take it compared to the production period.
That's right.
So what is the matter? Why is it not 25 tons full capacity? Are you doing still some testing, maintaining, or how? Just elaborate on that a bit.
Yeah, that's a good question. Our capacity is 25 tons per day. But it doesn't mean that we're going through a testing phase right now, testing the mill and the plant and getting
to optimize it.
To optimize it, and we've been doing a fantastic job at that. Our metallurgist has been getting a recovery of 90+% at this point.
That's very high.
And but we've been doing batches of ore as they come in, and as well as during this test phase, a lot of maintenance and upgrades and getting the plant optimized. So we've been doing that. We maybe work for processing ore for a number of days, and then we check it and empty the tanks, make sure the metallurgy is right, and we're gone through that a number of phases right now. So we have been working at full capacity on certain days, and then we've been shut down during those days. When the numbers you're working from is the total capacity when we started until the time we did an announcement of carbon harvest. But there was a number of days where we're working full capacity, and then a number of days that we were maybe shutting down, doing all of our analytics and metallurgy reports and getting that worked out.
But it means after this, let's call it trial phase, you are able to go onto the 25 tons per day, of course, and you have secured, I presume, also the supply of ore, which you need. Right. And let's come a bit more to the future, because I think this is the stuff what is really of interest, because 25 tons could be a start, but you want to achieve more. What could be a target for 2014? 50 tons, 100 tons, and how you think you're gonna manage that?
Well, it's a good question. Our business plan for 2014 is to get to 100 tons per day, build out our plant to 100 tons per day in capacity. And at this moment, we are looking at different sources of ore, about to negotiate we're looking at negotiating contracts with that, for that ore, tying it up, and different strategies to be able to do that. So those are in the game plan. That's in the game plan right now. And as well, the big hurdle right now is for us to focus on getting all of our paperwork and permits in by the middle of April. So that means that part of the, you're asking questions about the 5 to 7 tons per day on average of that time span. But at certain times we had to shut down and do some upgrades to, like, say, our tailings pond, which we've been working on for a number of weeks right now. So our goal is, like, as I mentioned, is to get to 100 tons per day by the end of 2014 in capacity and throughput. And we're going to need to obviously get into raising some funds to be able to do that. The payback is very good, less than a year. So we are talking to a number of parties right now to be able to do a raise of, we're going to need to raise probably in the neighborhood of around $5 million to get build out the plant to 100 tons per day and have the working capital to be able to buy the ore and process it. And the majority of that we're looking to be able to do in a debt instrument. So it's just working out that now and talking to debt
shareholder
parties.
Friendly.
Absolutely. We're all big shareholders in management.
What was management share in the company?
Management share now is around, well, we just did a financing some time ago, and we've closed that now. So it's around 17%.
Okay, that's a big chunk.
Yeah.
Great. So you are elaborating different possibilities, opportunities to get the financing done. Of course, we cannot talk about it. That's for sure. Yeah, we can only talk about it when it's safe and closed.
Right.
Yeah, but that's okay. So that means you are in progress, growing the company, making it bigger, and of course, then finally profitable, right?
Absolutely. Yeah. Even at full capacity of 25 tons per day with full throughput, we would be profitable. Break even.
Okay, break even.
Break
so
even with a small
tons,
profit.
We can imagine it's a bit more.
Yes, it is. Yeah.
Great. What I wanted to ask you is, we got a lot of our viewers have asked, hey, how do those guys make money when they do toll milling? Yeah, can you give us a short explanation? What is the margin and how you profit from the toll milling?
Yeah, there's a number of different ways that it's calculated, and it's quite an exact bit of a calculation.
Just a rough example.
Rough example, it works out to be approximately like about a 60-40 split. 60% goes to the miner, 40% for the ore processing at the toll mill. And that's it all varies depending on the grade of the ore. Okay, so we take a toll milling fee depending on the grade, so many hundreds of dollars per ton that we process. We get a discount to the gold price on that day that we settle it. We get a discount for the metallurgy so that we can guarantee, this is something different than what other Peruvian toll mills do, is they just put through the ore in the mill, and here's your gold at the end of the day. But they're not accountable for the metallurgy and making sure the recoveries are good. We take a look at the ore after it comes back from the lab. Our metallurgist sees it and say, this is what the recovery is going to be. We guarantee a certain metallurgy recoverable and take a discount on that. Yeah. So if we manage it properly, we make the margin on that. And then, those are the three main components to it at that point. So a toll milling charge, a discount to gold, and a discount on the metallurgy.
So if we take it dollar-wise, can we say like a gross margin, let's say per ounce, like $400 plus? Is that realistic?
Yeah, I would say so. That's what we've seen other public companies in this space and what their audited financial statements show. And what our test milling phase preliminary numbers coming out are showing that as well.
Well, that's a healthy margin, I would say, even with those gold prices.
Absolutely.
How would a higher gold price affect your business?
Well, because we don't charge so much on the gold, we don't actually get the gold. We buy the gold in the ore and we process it. So we pay a fee, or we get paid a fee for processing the ore, and then we buy the ore at a discount and a metallurgical discount. So
it's a percentage.
There's some percentages there. So we get maybe a 10% uplift on any up. And the good news is when the gold price goes down, we get about a 10%. That's right. We're profitable at, say, $800 gold.
So we can say it doesn't nearly matter where the gold price is, you make money.
Yeah, you could say that.
Maybe as a key question.
Absolutely. Yeah, so it's a nice business model from that point of view.
Yeah, I like that. Well, fantastic. So hopefully you can close the financing very soon, that you can grow the company and get it going.
There's a lot of interest in it, and we're for the payback that's coming from it. It's good. It's a good business model.
Fantastic. All the best for that, and I hope that I can interview you very soon, and you have the money in place.
All right.
Great. Ed, thank you very much.
Thanks, Johan.
Fantastic. Yeah, ladies and gentlemen, that was Edward Kelly, the President and CEO of Inca One Resources. You heard it. They are seeking for the financing to grow the company. They want to go to 100 tons per day this year. And the good news is the company can earn money. It doesn't matter if the gold price is at $1,200 or at $2,000. They have a healthy gross margin, and I think this is one of the key messages of this interview here. And yeah, have a look at the company, make your own due diligence, and bye-bye, and thanks for watching Commodity TV.